Hi, all. Welcome to yet another Koot Podcast series where we discuss global tech adoption trends, global SaaS adoption trends with global industry leaders. And today we have a very interesting guest, very special guest with us, Mr. Ramaswamy Iyer, who is the currently founder at Vayana Network. He's a serial entrepreneur, phenomenal person, and he played a very interesting role in setting up the digital supply chain, finance system in India. And prior to Vayana, he founded a fintech product called Clayfin. So let's hear more about his entrepreneurial journey. Let's welcome Mr. Ram. Mr. Ram, thank you so much for taking out time for all of us. I'm really looking forward to learn a lot out of this podcast, Mr.
Hey,
Ram.
thanks a lot, Nageshwari, for having me on this podcast here. Look forward to an interesting session.
Absolutely, Mr. Ram. So let's start with currently your thought process behind the Vayana network, and I know it is helping so many MSMEs out here in their credit finance and their working capital finance, and also a bit about your journey at Clayfin, Mr. Ram.
Look, I've now spent 32 years in this whole space of cash management, supply chain finance, that you would call, and I've approached it from different directions. But I think if you just look at the demographics of India, right, we have about anywhere between 70 to 85 million small businesses. Bulk
Yeah.
of them are really, really small, what you would call micro nano businesses. And almost every one of them, there is a recent survey that's come out from the National Policy Forum, which says that most of them are credit constrained, which means
Hmm.
they are unable
Okay.
to get credit at a affordable rate, and the credit they're getting is not enough to kind of run their business. So if you really want to think about this problem, you realize that you have to kind of think about it very differently, because these are all really small businesses, right? You can't go
Yeah.
and approach them and physically and do that. So you do it digitally. And I
Yeah.
think that's a problem statement. So in Vayana, we have a simple one-line problem statement definition: how to get affordable trade credit to every business in a supply chain. So that's the goal of the organization, and that's what we have been working on for the last about 9 years. Clayfin was actually an interesting segue into it. So my first startup was called Cash Tech, which then got sold, and is now part of a
Okay.
larger company. We used to supply software to banks to kind of manage the cash management of their corporate customers and supply chain finance for the corporate customers that they were providing.
Okay.
Clayfin, in turn, was actually providing all the digital engagement tools
Yeah.
that these banks wanted for their corporate customers and their retail customers and everything else.
Hmm.
And Vayana is more an outcome-focused organization where we are trying to actually make sure that we not only put the pipeline, but also water is flowing through the pipeline. When I say water, I
Yeah.
mean credit.
The
Nice, clean,
credit.
potable water is flowing through that pipeline. So that's the outcome that we are looking at, right?
Yeah.
I think this all falls in kind of a broad spectrum that I've had, that ultimately you have to get very large enterprises,
Yeah.
corporates, and very large financial institutions working together to
Hmm.
kind of be able to solve this problem. The
Hmm.
large financial institutions are required because they are the ones who have the cheapest source of money. They have
Hmm.
the one with the ability to kind of be in different places. They have lots of branch networks. They have an ability to kind
Yeah.
of have the feet on street. And large enterprises, because interestingly in India, if you say that there are 70 million really small enterprises, so who are these small enterprises? They could be your kirana dukan, it could be a ironing shop, it could be
Yeah.
a pharmaceutical small little this, it could be a bunch of things, right? About
Hmm.
roughly 35% of India's small enterprises are in service trading. So they're
Yeah.
buying and selling, right? I mean, which is a
Yeah.
kirana shop, a pharmaceutical, and all of that stuff, electrical, cement, all of those guys.
Hmm.
Then there are about 30 odd percent services, your istri,
Yeah.
your beauty parlors, and all of that stuff. And
Correct.
you have about 25-26% manufacturing.
Yeah.
So if you
MSMEs.
say,
Yeah.
oh God, there are 70 million, 80 million enterprises, how do I reach out to them? You realize that there are only about 400 very large guys at the top. If you have their help, you can actually go down their supply chain and their
Hmm.
distribution chain to reach out to almost 99% of all of these guys. Because there
Wonderful.
is a requirement from everywhere. If you go to a beauty parlor, also they are buying from some branded company.
Hmm.
The various products that they use for their customers. If you
Hmm.
take a pharmaceutical company or a kirana shop, you take a pan bidi dukan.
Hmm.
You just go to a pan bidi dukan to buy a pulse or a chocolate or a cigarette or whatever it is. You'll notice they have lots of stuff they have bought actually finally from a very large company.
Yes.
You will
Hmm.
find Parle-G. You will
Yeah.
find some Maggi noodles, and you will find some.
Correct.
So literally speaking, you can actually find a way, what we call a network graph, to kind of
Hmm.
actually figure out how to reach out to these small guys, understand
Hmm.
them into a context, and then be able to go back to lending institution to say that, look, this guy may seem very small,
But
but he actually is part of a very important supply chain.
got it.
So that becomes a very interesting problem and a solution framework to use to kind
Hmm.
of business, and that's what we have been involved with.
Absolutely.
Yeah. And
Absolutely.
Clayfin, I think the problem definition is very simple. They work with large banks
Yeah.
across the world, including India and outside,
Okay.
large, mid-sized, small banks, to basically help them to engage digitally
Hmm.
all kinds of customers. So I think what their sweet spot is that they figured out that you can't have just one kind of experience.
Hmm.
Uh,
Hmm. Hmm.
or
Hmm.
let's say just because everybody is a corporate, you can't have.
Hmm.
So a Coot may have a very different requirement compared to a Vayana, compared to somebody else. How
Yeah.
to kind of take those experiences and actually create very relevant,
Hmm.
engagement tools for banks to deal with them. Similarly, on the retail side, similarly on the small business side. So they are engaged in a very, very, I think, interesting amalgamation of technology, but also a lot of user research into figuring out how to kind of create very distinct experiences for banks uh,
Hmm.
to provide to their customers.
Absolutely. I think so many questions coming in my mind. I'll try my level best to structure it properly, Mr. Rao. So let's start with let's start with your Clayfin, right? Initially. See, when I understand at a Clayfin, like you mentioned, the water was not flowing, but you were, interacting with the, NBFCs and, your other financial institutions. So how did it start, Mr. Ram? Did you capture the smaller banks initially? Because after all, they are bureaucrats. I'll keep asking this question because they are bureaucrats. How did you establish the trust initially with them? Yeah.
So, as somebody, a friend, and who was heading our marketing always said, you never sell to an organization, you sell to a person. A lot of times we mistake that and we think, oh, we are selling to a very large bank or a small bank. You're selling to somebody in that organization. So, first and foremost,
Okay.
that's the thought process. So, you have to figure out who is that person that I want to sell to.
Who was the champion?
Correct.
Maybe.
Who is a champion? Who has a problem? Whose job is it to solve the problem? And that's the person you have to identify. So, irrespective of the size of the organization, you can talk to a JP Morgan Chase, or you can talk to a small NBFC in India. Everywhere there is one person that you will need to go and capture their imagination, solve their problem for you to get accepted in their organization. The process to get in is different. Obviously, a very large institution has a lot of processes.
Yeah.
But you will find that if you get a champion, as the right word that you use, you will find that those ability to for you to manage those processes actually become not so difficult. It takes time. But in a smaller organization, it can go faster. But the fact of the matter is that you're always selling to a person. I think that's one thing that anybody who is trying to sell enterprises to have to understand that they're selling to a person.
Hmm.
Now, there's a classical difference between one big difference really is that the person keeps changing. So one of
Yeah.
the things to understand is that nobody is permanently employed in the organization. Roles change, people shift from one place to the other. So you literally have to sell to a role and the person in that role. So the important abstraction you have to make is that I am selling, let's say, to a credit officer of small
Yeah.
business in a bank. And right now, Mr. Ram is running it. And therefore I need to work with Mr. Ram and trigger his imagination to say that I am the person who can solve it for him. But I have to also understand that tomorrow Mr. Ram may not be there and Nageshwari will be there or somebody else will be there. And therefore, how do I kind
Absolutely.
of sell? So I think that as long as you're clear about that, you will find
Yeah.
that it doesn't really matter the size of the institution. You
Hmm.
can be equally successful or unsuccessful. You have to have this as a process. Yeah, ultimately, what you sell on is trust.
Yes.
You don't sell on anything else. They have to trust you that you will be the person who will not only claim to
Hmm.
solve the problem, you will solve the problem, and you will stay
Yeah.
much longer after you said you have solved the problem to make sure the problem doesn't reoccur again. Right? That's a simple definition of trust that they require. And I think you have
Absolutely.
to build that trust. So the first organization you go to sell to, let's say you start from an absolute zero base, you don't have anybody, you have to figure out a way of getting, first of all, to the person. And second is you have to figure out how many references can you get that tells that person that you can be trusted, what you are building.
Hmm.
So let's say I'm a startup today, never ever sold to a bank, and I have to go and sell something to a bank. I want to find the person who's going to sell to the bank. That is okay. Once I find the person, I have to figure out how do I convince him that I can solve it for him, right? So there you have to follow on a bunch of things. I mean, you have to indicate what you have done before. You may have to give it saying that, look, let me first solve it for you and then you can pay me. You don't have to worry about it. The methods, but you have to
Yeah.
kind of establish a level of, you have to jump that, what I would call, trust barrier, to kind
Yeah.
of first get accepted. Once you get accepted, then you have to work very hard to maintain it, because it is not enough to
Yeah.
just
Yeah.
sell and then disappear, right? You have to
No,
sell and
no. Yeah.
kind of do that. And I think that karma of building trust and ensuring that the trust is repaid is something that really works for you over a long run. So somebody I met as a very junior person in a bank back in '94 when I started my life, first startup, is today now probably the CEO of a bank.
Yeah.
For a very long period of time, he has seen me. I've talked to him. He has talked to me. He has
Okay.
used some of my services. The trust has been built over a very long period of time. So tomorrow I go and show him something that I probably was never doing before. But he trusts
He
that,
trusts.
okay, I can
Yeah,
trust.
because
That is
yeah.
the key thing. I mean, most people kind of get too involved with, oh, how do I sell to large enterprises? It's a lot of work. There is actually, you're selling to a person. Once you reduce it to that, you realize that it is no different from selling to a consumer. You have to kind of build that trust, and trust building is a very, I would say, it's actually easier than selling to consumers, because consumers rely on a lot of things to build the trust. With people in a company or enterprise or a financial institution, there are few checkpoints only that they have to build that trust. They want to know somebody else who knows you, whom they trust. They want to know some place, some other place where you've done something which they can go talk, get references. So actually, the surface area of a trust is actually much easier in when you're selling to an institution, to a
Okay.
person there, compared to if you were to sell to millions of consumers, because there you have to do advertising, marketing, branding, position,
Yeah.
bunch of things. So I think those are all the important things I would just say is very important when you want to get started off. So whether it was
Got it.
Clayfin, whether it was Vayana, whether it was Cashtech, my first startup, I think everywhere the principle has always been the same. Can you identify people? The other important thing I would just say is that you have to be in a position where you're helping everybody you meet along the way. Most of people kind of look at life very transactionally. I'm selling to Nageshwari. Nageshwari wants this problem solved. I'll go all out to make sure I solve the problem, and I have great relationship with her. But maybe someone two levels below her is asked me for something, and I will just say, no, 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 not my job. You can go. You can't do that, because ultimately, if you look at it over a period of time, that someone who is now junior is going to become senior at some point in
Yeah.
time. They're going to
Absolutely.
remember this. So I always
Absolutely.
internally also in the organization always say kindness is economically one of the most best return businesses, emotions you can have. When you're kind to someone, it doesn't usually cost you much. But when you do that, it repays
It
tremendous
repays multifold.
multifold. So you have to
Yeah.
kind of think about this not just from the altruistic sense or a human sense that, oh, I have to be nice and kind. Even from a business point of view, it
Yeah.
actually works tremendously well. So
Absolutely.
I'm not saying you need to wish people on birthday, but if you're there at the right moment of time, I think it pays a lot. So I think enterprise selling to me is nothing but selling to a person, selling to a role, and then just making sure that the entire set of people you meet during those interactions, you are nice and kind to them. I think that those are my three fundamental
Sure.
principles.
Sure, sure, Mr. Ram. I will go for the enterprise GTM maybe later when we come to the Vayana, but let me stick here. During your Clayfin time, was there any initial, because see, there the water was not flowing as you mentioned. You were just, you were just giving a digital platform to the
Correct.
banks. So, what triggered the seed of Vayana networks? What was the challenge, or how did you get the idea of?
So look, I mean, it's like what I was giving you as an example before, right? So we were building in my first two startups pipelines. So
Haha,
somebody said, I want a pipeline because somebody has asked for water to be delivered. So therefore build a pipeline for me. I built a pipeline. I got my money for it. No doubts about it. I
got
built a
it.
very nice pipeline. But the fact of the matter is when you look at that pipeline, you say, I built a pipeline to carry 100 cusecs of water. It is a barely, 1 cubic of water is going through. Then you start thinking about, oh, what happened? Why didn't the water come in? Second is you figure out the
Okay.
water is not clean. It's what is coming
Okay.
out is not so great. So you start thinking about this problem and say, is it enough just to set up a pipeline, or do you also have to focus on the water? So
Got
you
it.
really have to go to and think about the problem very differently. So yes, just the pipeline business is obviously a very good business to be in. It generates a lot of revenue. You are really
Yeah.
useful. I'm not saying no. But if you have people who have bought the pipeline, who know their business of putting water in it, no problem. People
Got
who are not, who said, I wanted a pipeline, I built it, now I've forgotten about it, it is there, somewhere there. You really feel upset because you put a lot of love and labor into building that pipeline. You want to make sure water is flowing through it. And that's what Vayana started. Vayana was really a culmination of the fact that I went and sold internationally, globally, in India, systems for doing a lot of trade credit and financing, and it was ostensibly to do it. But I found a lot of the smaller and public sector and other banks who were still not very adept at getting water to flow through it. And that, I
it.
think, was the problem since we had when we started Vayana. How do we get that water to flow through?
So
And
that was my,
yeah,
yeah,
yeah, go
that
ahead.
was my next question. That Vayana now it is at the intersection of enterprises, supply chains, and financial institutions. The complexity, and it is a very chicken egg race, Mr. Ram. Right? The value will emerge only when you have a good good data sets of your enterprises, supply chains, NBFCs. So how did you? It's again a chicken egg. You go to enterprise, they will say where is the data for NBFCs, and you go to supply chain, they will ask where is the data for enterprise. So how did you crack that chicken egg race?
So Vayana, just to let you know, and for your listeners to know, Vayana in Sanskrit actually means weaving.
Sorry, weaving,
Weaving. So
weaving. Okay,
weaving
yeah,
together these three things that you talked about, right? Large corporates, their supply chains, and the financial institutions. We believed that Vayana was a right word to say that we're weaving them together into a pattern, right? So
okay,
that's the thing. It is obviously very difficult to start with a three-sided problem. A lot of people struggle with two-sided markets. So let's say you're trying
and
to
you
build
picked up
a
three-sided.
and we are talking about a three-sided market, right? But the interesting proposition really is that it's a win-win-win kind of a market. So let me just explain that. So let's say that you are a very large corporate and you are every bank that you want to talk to is available to you. I mean, standing outside
Yeah,
the door, want
yeah,
business with you. So it is not like they don't know the banks or NBFCs or whatever they want to do. But they also have 100 customers in, let's say, northeast of India, which today their banks are not interested in servicing.
got it.
So you want to go and talk to them. Look, can I work with you to get financing for those 100 customers? Correct. So now the corporate is very interested because it's an unsolved problem for him. Those 100 customers in the Northeast are also happy because they will get credit. Your job is to go and find an institution that is ready to finance small businesses on
Yeah,
behalf of a large business in Northeast. Moment you do that, I think it's actually very easy to kind of very quickly identify one institution that is got presence in Northeast, is very interested in Northeast, and then figure out the person who is responsible for it and be able to go and stitch together a deal. So that's the way you have to kind of look at it. You are never going to solve the entire problem. You are going to solve bits and pieces of it. And for those bits and pieces, you have to identify who's the right institution. For the institution also, it makes a lot of sense. So someone, let's say, handling a northeastern desk of a bank, it's not like he gets business regularly. He's not talking to the largest corporate sitting in Mumbai. But now I go to him and say the largest corporate in Mumbai has 100 customers in Northeast, and you can, I'll give you the platform to connect to these 100 guys. And then later on, you can go and cross sell to them, opening up a current account, opening some other fees. It automatically becomes a win for him. So
okay,
effectively, if you look at it, the person handling his CV will, value will go up because he's got more business and he didn't have to strive for it. He's going to get a lot of upside by the some 100 customers he probably could not
okay.
do. The corporate is great because he could not service it, he got that. And so you can kind of build, and over a period of time, suddenly everybody realizes, oh, can you also do this? I have got 25 guys sitting somewhere else. Can you do
Okay,
that? So you kind of build it that way. In India, one of the things that we all think is everything can be built in one day. It takes a long time. Typical financial services business, whether it's a platform side or an actual financial services, takes about 10, 12 years to put it together.
okay,
It is not an immediate, thing that happens. And it very much like bamboo trees. It takes a long time under the surface where nothing seems to be happening above. You
yeah,
have to be patient. You have to let that process go through, and suddenly you will find lots of bamboo trees coming up, right? You have
yeah,
to think about it that way, that you will keep on talking to corporates, you will keep on finding problems, then you will keep on talking to institutions, and then you have
got
to
it.
keep helping them and be ready to do that. And you have to have very good technology at the end. You have to have very working technology that supports you in that. So I think But if you say, oh, I've started a startup in, 2 quarters, can I get 5 banks and 6 enterprises and 1,000 MSME? It's not going to work that way. I mean, it doesn't work that way at all. So you have to kind of build it up, and you have to have the ability to have the patience. I
Hmm.
often think that the most important thing if you are starting anything is patience.
Good.
The people call it resilience, patience, whatever
Yeah.
word that you like. But at the end of the day, you just have to keep watering the plant. You are not going to get fruits immediately. You will just have to keep watering the plant for some time.
Got it.
So that's the process.
Sure, sure, Mr. Ram. Thank you so much. So, but though Mr. Ram, you had mentioned that you have to be kind, you have to win the trust. You're not selling to the enterprise. You're selling to a human. I take all that, Mr. Ram. I totally agree that. But can you take us through? Now I'm coming to that GTM to the enterprise, right? Can you take us through one interesting enterprise case study where how did the ball flow? Because enterprises obviously you have so many stakeholders, key decision makers. So overall, how much time it did it take for you? And yes, if you could share that journey.
So look, I mean, it's difficult to average it out. I mean, it doesn't make sense to average it out because every institution is slightly different. But let me just take an auto company, right? I mean, one of
Sure.
the first companies that we worked with.
Okay.
And my original thought process, the sales guy said, I will go and reach out to this auto company and look at whether we can do something together. Was no, why will they need us? I mean, they are too big and they must be already having a lot of people who are working with them. Or they will have other people like Vayana probably working with them. So why do we need it? And I think it took us about 3 months to just identify the right person to talk to.
Yeah.
So it takes time. It's a lot of these, it's not easy like going to LinkedIn and just setting it up, because even if you did that, you don't know whether that was the right person, is the right
Yeah.
decision maker, or is he an influencer, or is he
Correct.
just someone in the process. So you have to kind of think about, who do I connect to? So you have to spend a lot of prep time to understand who am I connecting to.
Absolutely.
One of the things you have to do when you're dealing with enterprises is to map out the organization. You don't have to map out everybody, but you have to map out
Yeah.
departments. So you have to do a lot of mapping exercise. So which means you have to go and meet friends, be very shameless about it. Somebody who's worked in the auto sector, somebody who's worked in it, and go and ask them, I mean, I'm interested in getting into this company. Who should I talk to, and who are they reporting to? And then you have to obviously use things like LinkedIn in order to figure out the entire map, right? And then keep
Yeah.
testing it out. When you talk to somebody, you also have to very quickly make up your mind: is this someone who's going to champion or not champion?
Absolutely.
And if he's a champion, you will find a lot of people very happy with what you're talking about and very resonating with them, but they're not decision makers. They don't
Correct.
have the authority to sign off. So you
Correct.
really have to kind of think about. So it doesn't happen like
And,
So there are cases where we have had very large enterprises in the first meeting.
oh, okay.
It happens. Those like a startup, you just then go to the temple or whatever it is, some and pray that some luck has turned that way. But a lot of times it is just a lot of just follow up. The amount of time you have to spend waiting just in the lobby for the meeting to kind of get there is very, very important, because you are not representing a large company or something that they look at you as somebody who's just come to waste your time, right? So you have to kind of be ready to spend that, not have a ego to say that, oh, I have spent 30 years in this industry, I should be just walking in.
No, no.
You have to just be ready to do the hard grind, but it pays off in the sense people really appreciate follow up. People can get irritated, but they respect follow up.
Yeah.
A lot of people think, oh, if I
I
keep calling
agree.
them, will they get upset? Yes, they will get upset. I would get upset. You would get upset. But you don't realize that someone keeps telling you, look, give me 5 minutes of your time. I'll just explain to you. At some point, you will say, ठीक है यार, तू 5 minutes ले ले, बता क्या करना है, right? I mean, so I think
Yeah.
follow up is absolutely crucial. A process is very crucial. When
Yeah.
you get that 5 minutes, you have to know exactly what you want to talk.
Yeah.
A lot of preparation has to go into that. You don't have too many shots at this. You cannot go in and first meeting spend 5 minutes talking about world soccer. I mean, you have to kind of figure out. Yes, you have
You
to
have
have
to be very to the point.
warm up. So I think this is just a thing. But the key to me is always to map an organization, understand the roles, understand who is the person, understand who is the decision maker. If you get that right, rest of it all will follow. Yes, it might take time. So it
Absolutely.
takes anywhere from, I would say, we provide an outcome-based software thing. If I were in
Okay.
Clayfin, I have to go and sell to a bank, let's say, a system. It can
Hmm.
take even up to 2 years, 3 years. A lot of times, what happens, I call a rebound effect. So someone is looking for some solution. I have the solution. I go and pitch. but somebody else has already pitched to them, 3 months back,
Yeah.
6 months back, created a rapport, but I know my solution is best. Many a times it is okay to walk out and
Yeah.
say, okay, no problem, why don't you try it? If that doesn't work, you know whom to call. And a
Yeah.
lot of times, if you have a very good solution, it will rebound. A lot of times when people say no, the classic saying in sales is that a sales starts when someone says no. You have to be able to kind of say, okay, fine, he said no right now. It doesn't mean a no permanently. How do I go
Correct.
through circling it back? So
Absolutely.
I just think you will find that enterprise sales guys
Yeah.
uh, generally have a lot of patience. Having said that, the word hustle, the ability to kind of create outcomes is really important. A lot of times you will just say, oh, that fellow doesn't have time this month, he's traveling, next month he will call me up. You are not pushing the agenda, right? You have to
Yeah.
figure out how it is. I was reading about some stockbroker who was not getting a meeting with a potential customer. He figured out the guy was traveling, booked a seat right next to him, and the flight got 1.5 hours in a domestic flight of time with him to pepper it, right? So you have to create that opportunity. You can't just
Exactly.
assume, oh, I sent him an email, he's not replied to my email. WhatsApp, the one tick, two ticks has not happened, he's blocked. You have to
I
have the
can, yeah,
creativity.
yeah.
That's
I
what.
can totally relate to Mr. Ram. Thank you so much for sharing. I mean, I can totally relate to each and every step. And to some extent, I think even at Koot, we are trying to go beyond spray and pray. Like you rightly mentioned, the right requirement, right? Signal based, you need to have the right knowledge. Even this one, Sendil's, Tamil comedian Sendil's, you have to have the right knowledge at the right time, the signal based.
Denzel has lots of lines that can be used for startups.
Sorry.
Denzel has a lot of lines in his movies that are very appropriate for startups. We can have an whole
Absolutely.
podcast on it.
Oh, okay, okay, sure. I'm glad that you're able to relate to that. I thought you may not know Sendil, but okay, I'm
Book.
glad.
Ah, I'm
Sure,
Ramaswamy, yeah.
sure, sure, Mr.
Ah,
So, no, absolutely. Now, I know you accept, right? Though you say that, the way you were saying that it showed that it is easy, but so much effort. So, what was your initial strategy to go and, collaborate immediately with many small bankers, or to hit the bigger enterprises, so that you have bigger credibility and you can go and easily collaborate with others? Was it the reality? Because even now when you see, okay, that Fortune 50 is my client, but still it is little difficult to crack the next set of enterprises, Mr. Ram.
So you have to understand that when, if you are a startup and you're trying to do your first sale, right? You can go and do your first sale with anybody. I mean, that's not a problem. You have to be opportunistic. If someone is ready to give you money, you take it. But you also have to understand this is also marketing. So the first set of customer you get and the first financial institution you get have to be something that people in the market, when they hear, they say, oh, wow, right? So it is important sometimes to ensure that you are not playing totally on the fringe. You are talking about, you may not be the person who anybody's talking about, but the people you are working for are people that
Okay.
everybody's talking about, right? So
Got it.
very
Okay.
often than not, you will find, like say, just a financial institution. There are financial institutions that are very friendly to fintechs. There are
Yeah.
financial institutions that are very, yeah, very conservative about whom they
Very
want.
conservative, very bureaucratic.
You have to decide which is the kind of institution, if you were to get, will really make the whole market sit up and notice, right? Because that's
Okay.
your free marketing. Along with the sale, you also get that marketing, right? Or if it is a,
Absolutely.
so if you're dealing with a, let's say you have a solution that can work for any large enterprise, which is the
Hmm.
segment that if you go and, you have 10 corporates, large ones in that, one
Yeah.
who takes the other nine will also be interested, right? If you are
Yeah.
going to a segment where there are only two large corporates and you get one, maximum you can get is one more, right? So you have to add little, not that you can do it, because sometimes you just want to get a sale, it doesn't matter who you get it from, and that's the reality of life. But you
Yeah.
want to think about these things to say that if I am going to spend my time, what's the, if I get it, what is the, so can you write a PR before you even go and pitch the client, PR copy. uh, Vayana works with this institution to do this, because then that kind of creates a buzz in the market,
Kind
right?
of already creates a
Correct. So you have to know what you're working for.
wonderful.
Again, I would say this is all nice post facto realization, and I'm kind of putting a lot of design into something which I didn't design, but I'm just saying, Now when I look back at it, I think we did all right, but not for these reasons, but it
Okay,
happened
your
right.
team was good. Okay.
Team was very good. They got the right people. But today, if I were to advise someone, I would just say if you have choices and you
Okay.
only have that much time to spend, figure out which will give you the maximum return for it.
Got
So
it.
if you are doing industries that nobody knows about, some obscure industry, fine if that's your niche. But otherwise, if you're looking to go to many industries, pick up someone on which press is already talking about. Like
Got it.
2 years, 3 years back, everybody was talking about solar panels, just as an
Yeah.
example, right? Every company in solar panel was being written about. Last year, for example, all D2C brands were, because Shark Tank was full of D2C people, everybody
Yeah.
was D2C guys. So you have to figure out if you have choices, then which are the kind of people to go after.
Absolutely, absolutely. Now we have come to the second last portion of our podcast, Mr. Ram. So I'll just slightly shift the gears now. Now at Vayana, you're working with so many supply chain and financial institution and enterprise. Why do you think some of the corporates which are enterprises which are tied up with Vayana, why they are able to get a better credibility in otherwise in comparison to the others who are having the same technology and same connectivity to the same financial institution, Mr. Ram?
I look, the answer is actually obvious in the sense that, as I told you, you're dealing with people. There are some people who are much better at
Yeah.
getting the best out of some people. So you have to, first of all, pay respect to that. So even you may be working with a very successful institution or enterprise, but not every person in that has made it successful, right? There are some people who have really work 120% of efficiency and get it successful. So you have to pay attention to that. Second is that there are DNAs of organization. There are some organizations that are very good with working with partners. And there are some organizations who look at partners as a short-term tactic to kind of get something for the next 2, 3 years, learn, and then build on their own, right? So
Got it.
you have to understand whenever you have a very short-term relationship kind of focused objective, then you will not be able to kind of really take it forward. So I think the important thing to really understand is the DNA of the organization also, because a lot of times
Got
from
it.
the top, the principle is that we will build everything. So in case we don't have something, just use these guys, learn from them, and then we'll build it. Correct? Other guys are saying, look, our core focus is this. We want to get this outcome. If we have to work with these people for long term, it's okay, but let's build them as a long term partner. I think a lot of times the institutions that are really successful working with partners like us, not just us, anybody, is because they have understood that where their core competency is and where should they be spending time on, where should they get somebody else to do the time on. The second is in terms of commercials. So a lot of times we are all, we will go to Starbucks, not negotiate the price of coffee, but we will go to our roadside vegetable fellow and negotiate massively for a 5 rupee reduction, right? So a
Sure.
lot of times this maturity in commercials is also a very important thing. A
Got
lot
it.
of organizations are very clear that they want to get the best deal possible. And they
Got
have
it.
a different department that will do the commercials and the different department that look at it from a business perspective.
Got it.
Those are all very difficult ones to make it successful from an outcome perspective, because the commercial guy is only looking at how do I get the cheapest deal out of these guys. And the guy who has the business is thinking about how do I get the best outcome in my business.
Absolutely.
So organizations that don't have buying power with the guy who is actually going to use you end up becoming a very not very good at getting the best out of you, because they are always looking. Third, I think, is that in India we don't have too much respect for time. So a lot of times we think it doesn't matter whether I get Ram to spend 200 hours with me or 600 hours with me, because we don't pay anybody on an hourly cost.
Yeah.
That's why a lot of the negotiation that happens is, why should I pay so much? I mean,
Yeah.
we really look at it as people. I mean, replacement, right? I mean, I can get somebody else to do the same job for 150. Right? So I think when people don't respect outcomes and people just
Yeah.
respect, look at inputs and try to compare those inputs or something. So India, I think always apples to oranges is a problem. Uh, Look, if I spent 30 years in supply chain, you're getting me for the experience I have in 30 years to ensure that we will always
Yeah.
do the right things and the at the right time.
Got it.
If you want to experiment trial and error because you can get someone at 1/10 the price, I think that's your call. I mean, I am nothing wrong. And if you are successful, good for you. But that's a difference. So I think
Got it.
a lot of times when you sell in the West, there is a lot of respect for how much time they want to
Time. Yeah.
short. And therefore, they're willing to pay more because they want to actually cut short the time. They'll hold you responsible for the outcome.
Mm.
Whereas in India, I think we always, because so many people, so we kind of think, oh, should I pay so much? It's not worth 5,000. This film doesn't look like I can get someone for
Yeah, we keep thinking having that,
that discussion, right? So in India, it becomes I think when we negotiate, we kind of disrespect both the. If I go and quote stupid price just because I think someone can pay it, I'm actually being as bad at it as someone who is not taking me because he thinks he can get something cheaper. He's not looking at what is he getting and the price. So, one of my constant fights in the organization also internally is that we always price to cost. We don't price to value. Look,
Okay.
I am giving you an outcome.
Yeah,
You should be paying me on basis of the outcome you reached. If you
correct.
get a good outcome, you should not pay me anything. As simple as that. You should be ready to take that also. We say, no, 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 we are sending 5 people. We are going to spend 600 hours on it. Multiply this by our cost. So minimum cost we have to get is at least 1,000 rupees. So let's charge them 1,100 rupees and negotiate. Finally, 1,025 rupees we got. That has got nothing to do with the outcome. You're treating as an total cost basis. So I think, in India, we just are very frightened to price to outcome. Uh,
Hmm.
you always price to cost. And I think then you get wherever you want to get. Like many people want a shiny pipeline. And now,
Yeah.
do you need a pipeline or do you need water is something you have to discuss, right? I mean, long back when I started my business, somebody asked me what technology do you use. I said I use carrier pigeons. Uh, because because that's irrelevant. What technology I use, you have to ask, are you getting what I want? Right? So many a times I think a lot of questions are focused on a completely different dimension. And sometimes it gives you a good idea of whether you want to sell to that someone or not, right? I mean, you really
Got
want
it.
to think about, is this guy like, what is his focus on? Time value of money is something I think we are very poor in appreciating in India.
Okay.
Yeah,
Got
so
it.
I think that's my only point I would just say.
Sure. And I think one, you've been talking about patience, and I'm sure you have your serial entrepreneur three, already. So what would be that one advice to the after this? By the way, we have the rapid fire, Mr. Ram. So what would be that one advice to the founders out there to have to follow their resilience and patience initially, to how do they manage their fund, because they have to burn cash at the, as you said, value, they have to show the value at the other end. So initially, what was your mantra during your early days? How were you able to have the mental stability, Mr. Ram?
Look, I mean, I think the first foremost advice I give to everybody, including to myself, is cut down your lifestyle to frugal. Because that, look, ultimately, when we keep talking about patience, resilience, it's only as much as we can afford it. Look, that's the economic reality of it, right? If I have bills to pay and I have taken a loan and I want a car and blah, blah, bloom, I need to then, I will have less patience if my business doesn't return me the money, right?
Hmm.
And very often we take money from investors believing that's our money. That's not, that's loan.
That's
Whether
a
it's
loan. Yeah.
equity or loan, it's a loan, right?
It's others'
That
money.
is the
Yeah.
money to fund your lifestyle. So I think the important thing I would always say is first focus on your lifestyle. Get it to as frugal as you can because that is what gives you runway. If you're really interested in a problem area, you're passionate about it, and you want to give it 3 years, 4 years for it to really build up, before you can start looking at it as becoming successful. Because it takes minimum 5 years, right, to kind of build anything of note. That 5 years, are you got a life? Do you have a lifestyle that can let you be very frugal, not worry about whether you're making too much money, and you're entirely aligned towards making the organization successful rather than figuring out how much money am I taking out of it. I think it's very important to me. I think
Okay.
because the moment you kind of have a very luxurious lifestyle, you will need money to pay for it. I mean, it's a fact, and it's
Absolutely.
not just you, right? Your family. So
It's
let's
a
say you've
bitter truth.
already been
Yeah.
traveling by business class, just as an example. You will need money to support it. I mean, so if you've got used to it, that's your lifestyle. And people don't pay attention to that. People want to take up business. They say, "What? This doesn't even give me money for the 20 lakhs I have to spend every month." I'm not. I don't have the patience for it. So I think I would just say this is a very controllable factor. There are all lots of things, right? It may not work out. The idea may not work
Yeah.
out. You may have to do many iterations of it. These are all external factors. You have the war going on right now. Therefore, something else changed. A lot of
Yeah.
things you can't do anything about, right?
Yeah.
Sitting in Pune or Bangalore or whatever. So
Yeah.
you go on what you can control. And to me, as a startup founder, I would just say first cut your lifestyle.
Okay.
Be ready to kind of live very, very frugally because
Very
then you
frugal.
build a lot of patience. Uh,
Okay.
and really get out of trying to figure out, if you're graduated out of an organization, institution, you're looking at your batchmates, are figuring out what someone else is doing, and
We
you have
should not have that
all of that.
comparison. Yeah, we should
You
not
don't
have
do all of that. You just have to focus on what you want to
what
do.
you want to do. Yeah.
Second thing I would just say is people mistake speed. I would say always focus on the lane.
Okay.
If you're driving a car, for example, a lot of times people going very slow, but on the right lane will overtake you when someone who's trying to go very fast. You find a lot of
Okay.
these cars going very fast and finding there's a signal. Anyway, both of us will reach the signal at the same time and wait. Right? But I am standing on the outermost lane and which I know will move fast. And therefore, when they both start, this fellow is behind, I am going ahead. Right. So I think a lot of times startup guys mistake speed for progress. They have to figure out
Okay.
whether they are in the right lane.
Got it.
And finding the right lane is, I think,
And
far.
what is the right lane?
A right lane is something that is as the best chance for success. It may not give you the fastest success. It may result that your success will come
Late.
years down the road.
Okay.
Right. So, for example, I can buy my customers. I can tell them I'll give you everything free. And
Hmm.
don't pay me money. After 2 years, 3 years, I will take some money from you
Yeah.
because I will suddenly be able to go to the market and say, a lot
Yeah.
of consumer startups have this, buy the customer, right? And do heavy discounts and all of that stuff.
Yeah.
Is that the right lane for you, or to build a brand positioning, make
Hmm.
sure that people will come to you as opposed to you having to go and sell
Yeah.
to them?
Got it.
That will take longer. So a lot of times
Wonderfully.
we think, oh, no, 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 we have to show investors I'm growing at 250% a month on month, and I'm getting lots of customers. Most of the times I'm buying them.
Hmm.
So the question you have to figure out is which lane you want to be in. Now, if you want to sell your company in 3 years, I find a lot of articles coming out, D2C companies, have a far shorter time to sell, get acquired. That's a very different thought process then. Then you're building a brand, you very quickly make some.
Getting it. Yeah.
I'm not saying good, right, or wrong or anything. I'm just saying that
Yeah.
that's your lane.
Yeah.
It's okay. But I think just being fast does not mean you're going to succeed. I
Succeed.
think choosing
Okay.
the right lane is far more important.
Got it. No, no, thank you so much, Mr. Ram. And no, wonderfully. I mean, the lane example was it came out really well, and the frugal, yes, definitely. Uh, Thanks for sharing that. Now, we are entering into the rapid fire, Mr. Ram. So you have to be a little quick. According to you, bank or fintech, which will innovate faster in the next decade, Mr. Ram?
Bank.
Okay, I was expecting the other. Okay, one metric. This is interesting.
I'm
One
talking about
met.
India. I'm talking about
Sorry.
India. I'm only talking about India.
Okay. Okay.
Yeah.
Yeah. Okay.
It's not true everywhere in the world. Yeah.
Got it. One metric you look internally every single day. I know there are many other metrics as a leader, but what is that one metric that you want to see every day? Sorry, every single week, Mister Ram.
Retention. I mean, customers, once
Okay.
they've come in, how long are they with you? Because
Okay.
sorry, just take a long time, but I think relevance is a very important word in whatever you're selling, right? Every day you have to ask a question, are you relevant to the customer? And the best variable for it is that is he continuing to use your product, right? I mean, so the
You retention with the customer.
retention with the customer. So I always look at customer retention. I think that's a very, very important metric to look at because it's,
Wonderful.
you always can make money on an existing customer. You have much more visibility than finding a new customer. And existing customer is your advertisement, your word of reference, word of mouth
Hmm.
reference, and everything.
Hmm.
So important is to track that variable according to me.
Got it. Got it. And AI in finance, is it overhyped or it is transformational or is it for real?
Early days, but I think it has got definitely already reached a point where it is tangible,
Mhm.
where there's a whole bunch of tasks that can be replaced, better thought through, simplified, than replaced with AI. I think one serious social problem we are going to get into is that hirings will be questioned and it will be far less hiring than before. Maybe after 1 year we'll hire even more. Like almost people who argue that Jevons paradox in technology will happen and there'll be a lot more output. But I suspect that a lot of work roles will get completely redefined.
Got it.
To that extent, I think there'll be a lot of change that we have to be prepared for. Um,
Hmm.
and I don't know whether all of us are ready for that change.
Okay.
Uh, we are not yet ready for the new type of roles that are required. So I think massive reskilling is required. I think in this country to kind of get people ready to accept that there are new kinds of roles likely to come up. Are you ready for those new kinds of roles? Uh,
Got it.
I think that's going to be an important one. But yes, I
So
think
is
it
it
is
not like
tangible and it's not no longer hype, I think. Look, a lot of hype is happening on different parts of the industry. That people
yeah,
get data center power, full
yeah,
large language models.
submarine data centers? Yeah,
Yeah, yeah, all of that, space में data center, उसमें data center, whatever X or that $1 trillion valuation. I just think if the technology per se, there was the internet. I'm old enough to remember the internet crash in 2000s, right?
yeah.
Technology was
I
very,
was
very
in my
relevant.
school days. Yeah, I was
Yeah,
in my
I know.
school days.
I lived through that period. And I'm saying that was the technology was very relevant. People just built all kinds of models on it. And I think that will happen with any new technology, any new.
Yeah.
I think AI has come to a point where it is proving that it can do many things differently and
Hmm.
most of the times for the better. The question that is going to come up is that will there be more jobs, less jobs? I think I am not the right person to answer that, but I do think that the job definition itself will change. You
Yeah,
know,
as of now, the tech industry, the system integrators, they are helping the manufacturer, I mean, the other enterprises in digital transformation or whatever. But every industry, for example, manufacturing or finance, they want to call themselves as a tech first. So I think the jobs will get distributed
you
among.
also have a market expectation, right? If you are a publicly listed company, one of the expectations from the market is that you're announcing a lot more AI and therefore reduction in your payroll cost. It's a fact, and therefore you will find a lot of companies now reducing labor, not necessarily for AI, but they are
Mhm.
under pressure from the market to show that they have this technology, and the best proxy for the technology is that you have far fewer people. Unfortunately. So I think you are going to go through that. So I'm
Got it.
that's the short term effect, but I think the longer term effect is going to be that previously I needed somebody to write documentation. I don't need somebody to write documentation now because there's already documentation. I need somebody to test. I don't need somebody to test, but
Got
I
it.
need someone to tell me that what has been tested is correct or not.
Got
That
it.
is now a new role. So a
Sure.
lot more assurance kind of roles, verification kind of roles will happen. After some time, I think AI will get better at that. Then you will move up to a different role. So I think we'll all have to be very agile about what kind of stuff we do.
Sure.
One of the things I maintain is a diary of every day what all decisions I take, and then I
Oh,
figure
okay.
out which all of them can be replaced by an AI agent.
Okay.
And
But
it is,
okay.
all of us should do it, I think. It's very
Okay.
interesting just to kind of understand where it's coming from. And you will figure out, I mean, like, I don't know whether you now, obviously, when you go to Netflix, there are a lot of times it gives you recommendations and to find out how many times you're taking their recommendation. So now somebody started thinking about you, what kind of movies you should watch, right? It's based on
Hmm.
yourself, but it is happening. There's some algorithm behind running it. So you'll find that a lot of times you are, doing because an algorithm told you to do it. And very
Okay.
often the algorithm will then start doing it for you.
Hmm.
So I don't think that's a big leap of faith. I think the question is really is that what's my role then?
Yeah.
Only a
How
nice
should
thing I
I?
like about it, only I think the brakes on this whole replacement of human beings is that finally we have to pay. Someone
Hmm.
has to pay for this economy to run. All of us
Yeah.
are out of jobs. We have nobody to pay. So
Yeah.
I think there are some point there will be a trade-off done that you can't have only machines running it. You will need people because machines can't pay. So you will have to figure that out. Hopefully they can't pay. I don't know. Maybe that's also not true. But I just think that.
Yeah. Hopefully, I'm sure. One founder you admire the most, Mr. Ram.
Well, but a lot of them, yeah, I like Jeff Bezos for by the kind of
Okay.
clarity he has in thinking process.
Okay.
I
Okay.
think he's just an amazing guy when he was running Amazon and we started it and he ran it. So I really like him. There are a
Okay.
lot of founders in India that I do admire. I don't want to take names because it'll sound less, but there are people who are very, I like generally leaders who execute and don't talk too much about it,
Hmm.
are not doing too much PR, and
But
not building personal brands. But I
but
think
silently executing.
yeah, and who are exceptionally frugal. I think there is, I like people who have very good ROCEs in their business,
Hmm.
return on capital employed, because I think very often than not, we just take money and don't have a return. We don't think we need to have a return on it as long as we are in the press and
Hmm. Hmm.
we
Hmm.
think we are
Hmm.
unicorns. I hate that word. I mean, I think the right spelling of that word should miss the har. It is a unicorn. So, so I just think, yeah, I think enough number of people, but I think a lot of times the inspiration is just within our homes. Yeah,
Got it.
not
Got
look,
it, Mr. Ram.
have to look far.
And if you had magic genie and if you could solve one problem in India's financial ecosystem overnight, what it would be, Mr. Ram?
Oh, I have made this point many times. I think some way we should be able to get the data that is there in GST, talk to
Okay.
the data that is there in NPCI, And somebody should be able to kind of provide that in a can format to all the financial institutions so that you can take, because it's amazing then, because I know how much you're buying, selling, I know who is paying you, not paying you, and I can very easily construct a model. So I would just think it just, we are brilliant as a country to be one of the, I think, the only country that can do that. And therefore,
Oh,
we should do it right away,
got
is
it.
my opinion.
Sure, no, no, absolutely, Mr. Ram. It was really pleasure having you, and thank you so much for so much sharing the examples. Let it be the your the lane example that you shared, and the frugality you shared. It was so much. I think we can follow actually in our real life also. Thank you so much for taking out time, Mr. Rao.
Hey, thanks a lot, Nageshwari.